Hi there, my name's Mike. I'm one of the directors here at Chrysalis Lifestyle Planning, and I thought I'd take a few minutes today just to talk about COVID-19 and what this health pandemic means for your portfolios. You're probably all sick of hearing about COVID-19 by now, and we're certainly trying to keep up the communications through these troubling times. But look, while the COVID-19 disease is pretty new to the world, bear markets aren't. Bear markets have happened time and time again. And so at this stage, what our investment committee are looking at is looking to weather the storm. We've designed our portfolios to ride through these sort of situations. And we're looking for our clients to weather the storm. We're really in the midst of this right now, and we're looking for the recovery ahead. We've taken some of the pain, some more than others depending on your risk profile. But really what we want to do now is get set for the recovery ahead. Things will improve. You know, we got through plenty of other scenarios in the past. We've been through the GFC, we've been through the tech wreck, there's been the 1987 crash, and in fact the market returns historically on the Australian market have been more than 13%. And that's including all of these bear markets that have happened over the years. Let's take a look at that. I'll jump onto my screen and give you a little bit more information around that, to provide a little bit more, I guess, reassurance and comfort for those who are invested in our portfolios. So as I just mentioned, market returns over the years have been 13.21%. Now this is dating back to 1900. This is a useful chart from marketindex.com.au, and it's mapping out what the Australian market has done over the last 118 years. As you can see here, we've had 22% of the years have been negative versus around 81% positive years. So you can see from this chart that we've had some very dire situations before. 2008, we saw the market drop by 50%, give or take, and we've made recoveries since then. If we have a look at what's worrying people right now, this is a 3-month chart of the Australian stock market. Now remember that all of our client portfolios are invested in a very diversified way, and the Australian stock market just makes up a small percentage of your overall portfolio. Most of our clients also have investments in the US, in Europe, to a lesser extent Europe, but in the US, parts of Asia. They've got investments in listed property, listed infrastructure, and we've got some other diversifiers in there with a couple of alternative investments which are in our portfolios at the moment. What people are more concerned about at the moment is this sharp drop, and you can see that we had a market high back on the 20th of February this year. So that's not that long ago, and we've experienced a fairly severe drop. We saw the drop extend into what was the 23rd of March. And you can see that we had around about a 34% drop in over the 3-month period. It is actually closer to a 40% drop from peak to trough. So that peaked back on the 20th of February. Now, if I push this out to a 10-year chart, you'll be able to see that our stock market is around as cheap as it was 10 years ago, providing a great opportunity for investors. But also, if we go back to a much longer period, back to 1982, you can see that the general trend for the market is up, and we don't see this changing anytime soon. While we're experiencing a fair bit of volatility right now, we feel that the markets will certainly go up over time. In finalising my roundup, I'd just like to show a couple more charts just for interest sakes, and what has happened over history with markets. Now we're now diverting our attention to the US market. You can see that we've had plenty of bear markets in the past. Back to 1929, there's 24 bear markets that we've seen here. A bear market being defined as around a 20% fall in the relevant index. Or the stock market. You can see we've had 24 here, and they range from as few as 45 days. I mean, we go back to the 1929, and the Great Depression was nearly 1,000 days. So that was fairly extreme. But like you see here, back in 1998, we had a short bear market of 45 days. We even had one as early as 2018, which lasted 95 days. If I could show you another chart outlining how things have progressed since those bear markets, it paints a little bit more of a picture with regards to how markets have performed immediately after these so-called bear markets. If I can just share this screen, you can see that this is what the averages have done. So when the markets, we got down to around 40%, we got around to about a 40% fall in both the US and the Australian market. So if we take this 35 to 40% drop, but trying to be a little bit conservative, you can see the 1 year return immediately after that has been about 14%. Now if I can just highlight that, this 14% here has been the average of what the market has returned the 1 year immediately after that big drop. Now this situation might be a little bit different. We don't always behave as per the averages. My gut feel with this one, it's been a very sharp fall, and we could see a sharp recovery off the back of this when it does eventually come, given the pent-up demand that will be out there. I know for one that I've had to cancel my holiday recently, and I'll be very keen to get back on a plane as soon as I know it's 100% safe. Now, just in finishing up, I just want to leave you with this final chart, and it is around trying to time the markets. Now, once again, this is the US markets, and this is going back to 1992. Now, as you can see here, if you remained fully invested from 1992 through to 2018, your overall return here would be, let me just point this out, your overall return would be 1,017%, as indicated by this bar chart. Now, if you were to miss just the best 5 days in the market, that return nearly drops to half. So the return ends up being 641%. And if you miss the best 30 days of the market, your return falls to a minuscule 129% over that same time period. So you can see the impact of not being invested for those sharp recovery days can be really detrimental. Look, it's been great sharing this with you. And if you've got any questions, by all means, call the Chrysalis team, call your advisor, and we'd be happy to talk you through any of these situations. Everyone stay safe out there, and until next time, thanks very much for listening.